Enphase Energy reported earnings this week, and frankly, there wasn't a lot for investors to like. Demand was down pretty much across the board, not all that surprising given the company's guidance for the first quarter of 2024. But conditions were even weaker in California than Enphase expected, and so that led to a little bit of extra weakness and pretty poor guidance for the second quarter of 2024. So I want to dig into the numbers and talk about what to expect not only from Enphase, but for the rest of the solar industry, because this is going to be a tough year, but we could see some green shoots or some positive signs later in the year. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with the report that came out this week. This is the earnings report. You can see $263.3 million in revenue. Gross margin pretty solid at 43.9%, definitely helped by the IRA benefit. You can see the non-GAAP gross margin of 41%, and excluding the IRA benefit, it was just 5.2%. So this really shows what's going on in the solar industry right now. The subsidies that were put in place from the IRA are really holding a company like Enphase together. But I do want to put this into a little bit of context. This is guidance for the first quarter. So gave this after the fourth quarter results were given in February. You can see that they expected revenue to be $260 to $300 million. That's in line with where results actually came in, actually on the low end of that. And then gross margin with the IRA benefit, 42 to 45%, non-GAAP basis 44 to 47. So you can see that results came in a little lower than that on the margin side. And that's ultimately problematic, mainly because there is going to be a lot of pricing pressure for all of these component suppliers in the solar industry. And I think this is fundamentally the challenge that Enphase Energy faces. They had a ton of tailwinds as module level power electronics started to be mandated in a lot of places. They were in a really, really valuable place in the value chain. So we had really high margins, 40, 50%. But that's not going to be the case if demand is dropping and installers need to cut their costs. I think that's fundamentally the problem. So you can look at some of the trends here. You can see the margins going down over time, a pretty sharp drop in margins. And this is even with the drop in revenue. Q1 2023, $726 million in revenue, dropped all the way down to $263 million. Now, there's a lot of talk on the conference call about sell-in, which is basically how many sales is Enphase making to installers, and then sell through, which is how many installations are actually happening. Management has said that they're underselling into the market. We will see if that ends up being the case, but that would also indicate that demand has dropped and customers just don't need the inventory that they had. So a lot of challenges when your demand overall is going down. They did give outlook for the second quarter, and you can see that they expect $290 to $330 million in revenue, and that includes shipments of about 100 to 120 megawatts of IQ batteries. This is the other thing, is that revenue should be going up just because batteries are a bigger and bigger chunk of sales. So right now what we're seeing is a massive decline in the number of inverters that are being sold, and that's fundamentally a problem for Enphase. Now, the good news is that cash is not really a big challenge for Enphase. $253 million in cash, $1.4 billion in marketable securities. There is debt on the balance sheet, so I want to point that out, $1.2 billion worth of debt. But unlike a lot of competitors in the solar industry, not running into financial challenges right now. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, I do want to put some of these operating trends into context to just show how much decline the business has had. The first one is revenue and operating income. And you can see here that revenue was growing sharply through the end of 2022, and then last year just fell off a cliff. A lot of this is an impact of net energy metering 3.0 in California, but also impact of higher interest rates. So you can see that now operating profit has gone negative. The other really striking chart is the company's shipments. Microinverters is really their core business. That's the orange line. And you can see that shipments are now about on pace for what they were in 2019, 2020. So just a massive decline in the amount of demand there is for products that Enphase makes. And this is really the challenge for the industry overall right now, is there's just simply not as many installations going in today as there were a year ago or 2 years ago, 3 years ago. And the headwinds that solar installers are facing aren't going to go away anytime soon. I talked about interest rates. Those have gone up sharply. It makes it harder to finance projects. At the same time, costs like labor costs are going up. So what they're going to do is they're going to squeeze their suppliers as much as they possibly can. Enphase Energy is one of those suppliers. So when you see margins going down, that's a big reason for that. They're saying, hey, we're not going to make any money on the installations that we're making. We need to have lower upfront costs. And one of the ways to pull out costs is lower component costs. So you're going to have pressure on solar panels, solar modules, on inverters, on batteries. Everything is going to come under pressure in the solar industry because those installers are just frankly not making any money right now. Now, the potential good news is that it seems like there are more projects being signed today than there was 6 months ago. So what's going to be key is the earnings reports from companies like Sunrun, SunPower, and Sunnova. We will see exactly what they report, and do they see their bookings start to improve a little bit? We should have ultimately demand for solar panels because this is a pretty cost-effective way to get your energy, especially when you include a battery storage system. And in a lot of states, energy costs are going up 15-20% this year. So that should make this a little bit more compelling. There's also a lot of incentives in place from the federal government. So everybody in the industry is expecting the second half of the year to be a little bit better than the first half or even the second half of 2023. The concern from Enphase is that it seems like that bottoming out and the trajectory up is not happening as quickly as they were expecting, and maybe not as quickly as a lot of investors were expecting. So that's kind of the worry right now, is that yes, maybe the second half of the year is going to be better, but how much better and how quickly are things going to get better? Enphase is not facing solvency problems, but there are plenty of industry participants who are facing solvency problems, in particular on the installation side. And if installers are not solvent, if installers are not buying products from Enphase, then what is Enphase doing? So very tough time for the solar industry. I will be back covering some of the other earnings reports that are going to be coming out in the next few weeks. We'll see kind of what the picture is across the industry. But for now, we're not seeing any sort of real recovery from Enphase. I think the stock is still relatively expensive, despite the fact that it hasn't had a very good year, and just not interested in buying right now at the kind of multiple that they're trading at, especially when we're now losing money, now operating income negative. So need more evidence of a recovery before getting too bullish. But what do you think about the results from Enphase Energy? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.